Good morning everyone, and thank you for joining us on Morning Markets from True Potential. Today, focusing on equity market performance, continue to discuss the volatility that we've seen in sovereign bond markets, and then look ahead to what we might expect this evening from the Federal Reserve. So just looking at asset market performance yesterday, equity markets in the main continue to move higher. Probably within that, the UK was lagging a little bit. Interesting there just to observe the reaction to results in the main. That seemed to influence the outcome for the main index in the UK yesterday, with the likes of BP, Standard Chartered reporting results, but then suffering a disappointing share price reaction to that. And that follows the main sort of narrative that we've seen in equity markets over the past number of weeks, as stronger or good company results have been rewarded with positive share price reaction. Those disappointing have seen probably an outsized reaction on the downside, so that level of volatility reflecting the outcome from the results. It's also, I suppose, worth commenting on that in that we continue to see good earnings delivery, but also coming through with not the degree of pressure on margins that may have been expected given the supply chain issues that's been discussed, but also rising input costs such as energy, with which we're all very familiar. So that trend, good results, continues to be supportive of the performance that we're seeing in equity markets. The bond market, very much about what we continue to see, that volatility in the sovereign market, particularly at the shorter end of the bond curve, so thinking about lower duration, say 1 to 5 years. And that is all coming to the fore, I suppose, as we reflect on inflation and also interest rate changes. It's a big week for interest rates and also for quantitative easing, or the reduction in quantitative easing programs. It was discussed yesterday what we were seeing coming through in Australia, their move away from their yield target at the shorter end, but also the dovish statement which they gave to accompany that. And that brought further positive momentum into the shorter end of the curve yesterday, and we saw that across the UK and in the US. So similar trends, but very different drivers across various regions. We'll hear from the Federal Reserve this evening, expectation being that they will talk about how they plan to end their quantitative easing programme, probably starting in November. The debate then really is around when they think or are considering increasing interest rates. Will that be in 2022 towards the end, or in 2023? That's the real debating point, and really something that we'll focus in on when we discuss our reaction to the Fed's discussion tomorrow. Please do join us again tomorrow. Many thanks.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to the channel on your desktop or through the YouTube app on your phone and click the subscribe button. You can then press the notification bell symbol if you wish to be notified as and when new videos are released. Doing this is a great way to keep yourself updated with market developments and personal finance insights. Thank you to everyone who has subscribed, and we look forward to continuing to help you do more with your money.